imagine standing in a long line at the airport. The security checks are slow, everyone is tired, and it feels like you'll miss your flight. Then, out of nowhere, a new fast lane opens. If you meet the rules, you'll get through quickly. This is what just happened in the world of cryptocurrency. After years of delays and endless paperwork, the US Securities and Exchange Commission, or SEC, has finally opened a fast lane for crypto spot ETFs. This change could bring new energy into the market and give investors easier and quicker ways to invest in digital assets. On September 17, 2025, the SEC approved new listing rules for exchanges like the NYSE, Nasdaq, and CBOE Global Markets. These rules are called generic listing standards. What makes them so important is that they allow crypto spot ETFs to be approved much faster than before. In the past, every crypto ETF application went through a slow case-by-case review. The SEC would take months, sometimes more than 240 days, just to decide on one. Under the new rules, if an ETF meets the basic requirements, it can be approved in only 75 days. That's a huge shift. The waiting game is finally ending, and the process is becoming clearer and more predictable. To understand why this matters, let's quickly explain what a crypto spot ETF is. An ETF, or exchange traded fund, is like a basket of investments you can buy and sell on the stock market. A spot ETF directly tracks the current price of an asset such as Bitcoin, Ethereum, or another cryptocurrency. This means you don't have to buy the actual token, set up a wallet, or worry about private keys. Instead, you can just trade the ETF on your regular brokerage account, just like a stock. It makes crypto much more accessible to everyday investors and large institutions alike. We already have Bitcoin and Ethereum spot ETFs, which were approved earlier this year. But under these new rules, other tokens are finally lining up for their chance. Two big names are at the front, Solana SOL and XRP Ripple. Both have been waiting for more than a year, stuck in the old, slow system. With the SEC's new fast track, they could now be approved and launched much sooner. This means investors will have more choices. Instead of only buying Bitcoin or Ethereum ETFs, they might soon see Solana and XRP added to the trading apps. That opens the door for even broader adoption. Of course, not every token will qualify right away. The SEC has set some certain conditions. For a crypto spot ETF to use the fast lane, it must be tied to a cryptocurrency that already has regulated futures trading in the US. Those futures contracts also need to have been actively traded for at least 6 months. In simple words, if the token already has a strong and regulated market, it's more likely to be allowed. This way, the SEC ensures that only the most reliable and liquid tokens make it to the ETF market, at least for now. This decision matters because it finally gives the market something it's been asking for: speed, clarity, and fairness. For investors, this means quicker access to crypto products. For asset managers, it means less money and time wasted waiting for endless approvals. And for the broader financial system, it signals that the SEC is willing to bring crypto into the mainstream instead of keeping it on the sidelines. This could also encourage institutional investors, big players like pension funds or endowments, to finally step in. They often avoid crypto because of unclear rules, but now they may feel safer investing through ETFs that are regulated and easier to manage. Even with the new fast lane, some challenges still remain. First, not every cryptocurrency will qualify. Tokens without regulated futures markets may still face delays, or they might never make the cut at all. That leaves out a large part of the crypto world. Second, the risks of the crypto market don't disappear just because ETFs are involved. Prices can still be highly volatile, and regulators will be watching closely for manipulation or fraud. Third, even if approval is faster, the behind-the-scenes work is still heavy. Asset managers need strong custody systems, reliable surveillance, legal paperwork, and service providers to make everything work smoothly. As one expert put it, the new rules may clear the path, but companies still have to do all the working. Finally, there's the global factor. Much of crypto trading happens outside the US, in markets with fewer rules. That creates risks that US ETFs will have to manage carefully. If these new ETFs launch, the effects could be huge. Investors will have more variety, not just Bitcoin and Ethereum, but also Solana, XRP, and potentially more in the future. That could bring more liquidity and stability to the market. Competition among ETF providers could also push fees lower, which is great for investors. And as more money flows into these funds, the demand for secure custody, auditing, and insurance will grow, creating opportunities for new businesses and jobs. The ripple effect might even go beyond the US. Other countries often follow America's lead in financial regulation. If the SEC makes crypto ETFs work, regulators in Europe, Asia, and elsewhere may adopt similar rules, making the global market more consistent. The SEC's new listing rules are like opening a fast lane at the airport. Instead of waiting months or even years, crypto spot ETFs can now move ahead much faster if they meet the standards. This change could bring more tokens, more investors, more liquidity, and more credibility to the crypto world. Solana and XRP may be the first to benefit, and if they succeed, others could follow. The road ahead still has challenges, from investor protection to global risks. But one thing is clear. With these new rules, crypto has taken a big step closer to becoming a normal part of everyday investing. And just like passengers rushing through that fast lane at the airport, investors may soon enjoy smoother, quicker, and easier access to the world of digital assets. This is all from my side for today. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up, subscribe to my channel for more financial insights, and I'll see you next time.